Oh, dude, we got so much candy this night.
Oh, this is sweet.
It's been great Halloween.
Hey, isn't that old man Beavis' house?
Yeah, everybody says he gives out the best candy, full chocolate bars and everything.
Yeah, but my mom says not to get near there. He's weird.
Yeah, but it's come on, man. It's Halloween. Let's just go. Let's just go.
All right.
Okay.
I don't know about this, man. Are you sure?
I don't know. My spidey senses are really tingling about this one, but he's got really good treats, so I think we should do it. Dude, we gotta get out of here.
Trick or treat. Not this way! Happy Halloween, boys. In this household, we do Halloween a little bit differently. What the frick is going on? This year, instead of giving out candy, I'm gonna be giving you some of the hottest growth stock picks on the market.
We're trick-or-treating.
I'd rather have the candy.
You just want some chocolate candies. I heard you have full chocolate bars.
You boys go out and buy these, you're gonna make yourselves a lot of money. Let's dive in. Stock number one on our list today is the company MercadoLibre with the ticker MELI. Year to date, this stock is up over 138%, and if you look to the lifetime performance of this stock, you'll be even more impressed. If you boys haven't heard of this company, it's because they are an e-commerce company based out of Argentina, and they are growing their sales like crazy with the year-over-year aggregate growth of 34%. If you actually look to some specific areas, take their main market in Argentina, you see an 81% increase in volume on a year-over-year basis. Along with their online e-commerce channels, they even have a payment system, which is widely used. You can think of it kind of like a South American Stripe or PayPal. As you can see over the past 2 years, the amount of revenue growth on a year-on-year basis has absolutely exploded. These are some massive growth numbers. One thing that I will note to be important for you boys is that they are still losing money on the bottom line, represented here by net income. This is what happens with a rapidly growing business when they're expanding, getting into different areas. But what I love about this company is you're essentially placing a bet on two rapidly growing areas, e-commerce and the South American region. The stock today trades for $1,300 USD, which I know is a steep price tag, but it's a great growth stock if you're looking for some South American exposure. Next up on the list is a stock right here in Canada called Canaxis with the ticker KXS.TO. And this stock is up over 1,500% since it IPO'd back in 2014. This company provides a supply chain management software, and they're a company that's based out of Ottawa, Ontario. If you actually take a look into it, their service is trusted by some of the biggest names out there. Companies like Procter & Gamble, Unilever, Nissan, and Ford, just to name a few. Although today this company is trading at quite a rich valuation, it's definitely one to throw on the watch list, as it's one of the sneaky Canadian tech companies that we have available, as the option here is quite slim. What I love about this company, however, is it is a financially strong corporation with enough cash on hand, 184 million, to cover its total liabilities, sitting at 130 million. The stock trades for $213, and this is of course traded in Canadian dollars. The next up is a Chinese company, JD.com. The ticker, quite fittingly, is JD, and this stock is quietly up 164% year to date. This is a unique stock in that you're getting the Chinese exposure, but as you'll note here, it does trade on the North American exchange. It trades on the NASDAQ. This is a massive e-commerce and logistics company based out of China. You can think of them quite simply to a competitor to the great Alibaba, which we all know well. What I love about this company is that although they're smaller, In 2017 and 2018, they partnered up with some of the biggest behemoth companies that we know today. Companies like Google, companies like Walmart, companies like Tencent, which to me shows a very promising sign when they're getting backing from these types of large companies. Take a look at their revenue growth dating back to 2018. This is on a quarter by quarter basis. We are seeing some very respectable high double-digit numbers. This is exactly what we like to see out of a company that's growing and expanding. These numbers that you're looking at on the screen are in Chinese currency, so that's something to be aware about. But what I like about JD.com is they have about double the amount of assets to their liabilities. This is very important for the financial health of a company. The debt to asset ratio is what we call it. It's sitting at 55.74%, which to me is a great sign. Very similar to MercadoLibre, where there's two main driving forces, two major factors that are helping boost this company forward. JD.com is a great equivalent, but getting that over to the Chinese market. Essentially what you're doing is you're betting on a growing Chinese economy and an increase in popularity, an increase in demand for e-commerce. The stock today trades for $81 USD, and that leads us on to our last stock. The last stock on our list is the company Adobe. The ticker is ADBE, and you don't want to sleep on this giant company. It's slowly, quietly in the background been performing extremely well to where today they have a market cap of over $234 billion. This is of course the computer software company behind some of the most famous softwares, ones like Photoshop, ones like Premiere, and After Effects, just to name a few. The way that I see our society heading, with the rise of influencers, with the rise of demand for content creation, people just being more creative when it comes to videos, when it comes to editing, there has been a big increase in demand for these products, and I don't see that slowing. What's great about a company like Adobe is that over the past number of years, they have entirely shifted their business from one-off sales to a recurring revenue model. If you want to use their products, you're now buying them on a subscription basis, and this has reflected very well in the company's earnings. Taking a look at the earnings per share, they've been slowly and gradually growing this. And one of the things that I personally like about Adobe is they're very consistent at hitting their targets. Also, if we look at return on equity, we're seeing a very high ROE number, at least in comparison to the sector, at least in comparison to the country average. The company does not pay a dividend, but like I said, it's performed extremely well, and you can get your hands on some Adobe shares for today trading at $488 USD.
We gotta get out of here. We gotta go.
Now guys, I have one final thing, a final treat to give to you. I think you're really gonna like it. Give me one quick second, okay? Guys? Guys? Where the heck did you guys go? Oh well, I was just trying to give them some candy. Thank you all for watching today's video. I hope you enjoyed our little special for the Halloween edition. This thing never works when you want it to work. For real, I actually tried turning it on there. I have no comment for this thing. A quick word on growth stocks. For anybody new to the channel, for anybody maybe new to investing, this is an area that I'd say, especially when it comes to the speculative picks, especially when it comes to the very high growth penny stocks that you'll see on YouTube, be very careful and proceed with caution. It can be very alluring, it can be very tempting to buy into a cheap stock with a low share price because someone on YouTube is covering it. I know, I mean, no disrespect to other YouTubers, but there's a lot of YouTubers out there that just cover the high growth, speculative penny stock picks. Very likely because they're new to investing themselves. They've been doing it for a year or 6 months or a couple years. I think that is a major mistake to get sucked into these stocks that are performing well because you often are chasing previous gains. You're looking at it from a stock quote perspective versus buying an actually fundamentally strong business. And hopefully the companies that I talked about today, take a company like Adobe, which is a massive company, been around for a number of years. That's a great example of a strong underlying business. Even for the other companies, when you look into the balance sheets, you make sure they have cash on hand, you make sure they're not drowning in debt. Those are the important things that you have to look for, rather than just going out and buying an IPO because it's a new exciting stock and there's a whole bunch of potential going forward. It's very important to distinguish the two, but just the point I'm trying to get across is be very, very careful. It's not to say that you can't do well with growth stocks. In fact, you can do very well. I own a number of growth stocks in a portfolio. You should have a healthy mix. But what's very important is just not falling victim to chasing the gains. And when you come into the approach of buying both growth stocks, you have to understand that you have to be a little more on top of things. All the stocks we talked about today have done very well. They're trading at rich valuations. And if you like this approach of investing, you could buy them and hope to sell the stock down the road for a higher price. Hope they continue doing well because you're buying into a strong business. Personally, for me, you guys know I like more or less a value approach where we're buying beaten down companies that are kind of out of favor, and with time they'll appreciate, get back to their levels. That's a much less stressful way of investing. But hey, that's just me. Takeaway for this video is don't get sucked in to the penny stocks. Don't get sucked into the hype and the IPOs without actually really understanding that you're buying into a great business. If you guys enjoyed today's video and you enjoyed our little Halloween special, feel free to drop a quick thumbs up, leave a comment down below, let me know what you thought. We do these kind of videos every once in a while, usually on a holiday, just for a little bit of extra fun. If you're a beginner to the stock market here in Canada and you want to learn more about our investing academy, if you're interested in courses, training, a community to ask questions, there's a link down below. We'd be happy to chat with you about that. But as always, I thank you guys for watching. I hope everyone has a safe Halloween, if anybody is even trick-or-treating. But that's it for today's video. We'll see you guys in the next one. There's not a twist.
Okay.
We're back in action.